Hey everyone, the professor here, and welcome to today's crude oil analysis video. Now, I kind of want to get started first today on this special Sunday by wishing all of you who are fathers a happy Father's Day. I know it's only one day of the year, but I'm just here to remind you that as a father myself, right, what we do each and every day with our kids matters. So, just a reminder to be visible and to be in their lives, regardless of the circumstances that any of you may be facing, any challenges that you were facing. You can be intentional and make a better decision starting today to be there and be visible for your children. So, again, happy Father's Day. What you do matters, your role matters. And so, again, I just want to extend my welcome and gratitude to each and every individual who is a father today. And happy Father's Day to those of us like myself who have lost our fathers in the past. So again, they played an intricate role in our lives. And again, happy Father's Day to my dad up in heaven, and to happy Father's Day to you and your fathers as well. So today we've got a lot in store for you. We're going to talk about how you can profit from crude oil trading this week. I'm going to be showing you some zones. I'm going to be showing you some techniques in this video, and I'm going to be breaking down what did crude oil do last week, okay, and what it's probably going to do this week. But of course, everything is always going to be based on those levels. So we are going to be getting kind of right into the chart right here. And let's start kind of breaking this down as we look at last week and what began to happen. So let's go over to the weekly chart, which is right here. Okay. And again, we are going to look at that this past week. And I'm going to kind of get rid of this alert that I had set right here. And yes. Okay, so let's go ahead and take a look at last week. And again, last week is going to be this last green candle that sat right there. Okay, so we were looking at price that had started here back in April. Okay, and we can see that crude oil has been dropping. Now, this is a very interesting weekly green candle right here because it did close above this candle and it did close above this candle. So at this point, when we're looking at the weekly, right, we have a potential to come back up to these highs right in here, which is, $80 a barrel or what have you. So we're going to be looking at that on a more micro level as we move forward. And again, the kind of thing that stood out from the weekly and kind of why we changed our perspective inside of our trading club was we began to see these bigger time frame Fibonacci levels. Okay. One of the things that we enjoy doing is looking at fib levels on crude oil. Once they exceed that 61.8 ratio, all right, we look for price to come down between the 61 and the 88. And I purposely leave out the 78.6 here because I like to have this open space area where I can look at wicks, where I can look at price action. And again, we all know, or at least that you should know, is that if price was to close, okay, below the 100 level, and I'm going to turn that white to keep it consistent, okay, then that is when you usually see some type of trend reversal on any time frame that you may be on a fib level. Okay, so the 100 should really always kind of be your exit, because if it closes below there, then you're risking price, in this case, continuing down. But again, that did not happen. So once price came down to this level, okay, 2 weeks ago, we started becoming bullish because we saw that rejection on a smaller time frame. So that is kind of where we are now on the weekly perspective, and we're going to kind of really begin to break this down as we kind of drop into this daily chart here, because now we begin to see again things at a different level here. And this is why it's so important, okay, in your trading journey, to make sure that you are looking at these multiple time frame analysis. Because if you're a scalper, you're going to live on a smaller time frame. If you're a swing trader, you're going to live, or you should live, on the higher time frame. And if you're kind of a hybrid, right, you want to look at what price action is doing within all these different time frames. So as we kind of go into here now, we want to start looking at this opportunity here of what's happening with regards to the daily time frame. Okay, so as we begin now to do this, and this is where I begin to kind of look at the bigger levels. So I'm going to look at levels that are, relatively within a close range to kind of just give us a kind of a 30,000-foot view of what price has been doing. Because what I like to do and what we do inside of our club is I like to give our members, right, all of these levels each and every day, even though levels on a higher time frame will stay these levels, okay, for quite a while. But then what I do for them is I break down the smaller charts, and we're sharing these charts inside of the club. So the first thing that should stand out right here when we look at this and why some members took these wicks down for scalp opportunities was because we were able to fish. Okay. We were able to fish the area that we love to see, which is again, right in this area between the 61 and 88. We let price push as far as possible. And we're looking at price action. Okay. Again, we just talked about it. This 100 level would be any type of long-term exit level. Okay, if we were trading, for example, on a swing trade in this particular case, okay, because if the 100 level is compromised and closed, then you risk what happens over here where price can continue to the next level, which we've marked up here at 84.41. Okay, so we are currently right in this level right in here, but what should stand out right here is that, let me grab an arrow, is that over the last 3 days, we had price come up to 79.34, rejected, 78.90 rejected, and 79.16 rejected. So once we start seeing on a daily time frame this second candle rejecting, price coming back up, I'll show you this in just a little bit on a smaller time frame. This is why we were able to take some sells, even though the big trend was coming back up. If you exit this and kind of look at this, and I'll kind of remove the chart here, you can still see here that we are still on this downward trajectory. Okay. Now, that will change again if this 80.50 is broken and closed above, because then we'll get this pattern to begin. So that's why this is going to be a crucial area as we kind of look at the smaller time frames as we are kind of coming through and moving along. Okay. So as we kind of dig deeper here now, what we want to do again is kind of go back and put our lines here. And what I'm going to do now is I'm just going to get rid of our fib levels. I'm going to go ahead and get rid of this here. And we're going to begin to look at these levels on a smaller time frame, because again, my goal for you in this video is that by the time we are done with this video, you are going to have every level set up, and I'm going to give you where I think you should be looking for buys or sells and why as we get a little bit lower on the time frames. Okay, and that's going to be so important as we kind of move forward. So let's get kind of back into the chart here, and as we begin to break this down here. By the way, if at any point during this video you get some type of value, hey, you can hit that like button for me. I would truly appreciate it. If you're brand new here, you can subscribe to the channel. Make sure you turn on your notifications. Hey, and don't forget to share this video with your social media, with your trading community. That's how you can maybe bring on trading to someone else. And this is how you inadvertently can actually impact and change a life, because this is life-changing once you do it right with the right people in the right community. So as we are kind of looking here at these levels here, now we've established that fib level that's right in there. So there's really nothing that stands out other than this intermediate rejection area that we have here. So what I like to do is kind of put an orange line there, because that lets me know, and that lets my members know that this is a temporary area of rejection. It's not a big zone, but it's a temporary area. So now we're looking at the 8-hour chart. So as we begin to drop down in time frame, you should be able to see how the price action moved in these consolidated areas. And again, we were buying and selling in these consolidated areas based on strategies that we use, very simple strategies that anyone can learn inside of our trading club. So again, if you have not yet had a chance to do so, I'll encourage you to, as you can see scrolling down at the bottom, you'll be able to come on in to the professortrades.com. Check out what we are doing. We are growing fast, but we are growing with some amazing people who are sharing charts, who are giving value. It's a nonstop chat, whether you're trading London session or US sessions. Those are the two main sessions that I'm having traders focus on. Okay, you're going to get some massive value for less than $1 a day. So I'm going to encourage you to check it out. Again, no lifetime commitments, no contract. It's month to month. There's a yearly plan. There's even a life plan. that would be ridiculous. But come on in at the monthly plan, see what we're doing. And if you like it, stick around much longer. You're going to get massive value. You're going to have live trading every day, and you're going to have quality people inside of our group. So we are kind of looking at this level right in here. So now we begin to look at different levels as we begin to look at the 8-hour time frame. Okay, we see kind of that rejection right in there. And again, the way I validate the rejection is that you can see that this here was support. Okay, we had support there and we had support there. And again, we're coming off of this level. So that's a viable area that you may want to look at. Because if you're thinking about getting into a sell, for example, at the bottom of this red candle, you may want to look to your left and right and kind of see that this has been a very crucial level where price has stopped and reversed. So you may want to avoid getting into a sell so close to a very support level. This is why I keep emphasizing that multiple time frame analysis is so important in your trading, whether you're a scalper or you're a swing trader. Not as much if you're a swing trader, but if you're a scalper or you're just trying to catch some pips a day, which again, in our club, I'm giving our members 20 pips a day easily just on our trade alerts with not only crude oil, but with the indices and the Forex pairs. So again, you don't want to sell something when it's very near a support level, especially if you're not looking at the higher timeframes. Remember that banks and institutions don't trade on a 5-minute chart. They don't trade on a 15-minute chart. They're trading on these daily and weekly charts. And that's where you should be investing some time to be looking at the areas of that particular frame. Okay. So now what I'll do is I'm going to go ahead and replace this. And I'm going to drop that here, right in here, because again, same thing. You would want to use caution because we've had previous rejection in these areas, like right in here. Okay. So you would not want to start buying something near this 79.25 area because we've seen that rejection happen before. We've seen that rejection happen before. So you would want to let it clear, close if it's going to go higher. So as we begin to look at this now, right, as a trader, depending on your trading profile, whether you're going to be a scalper or a long-term trader with crude oil, you can't hide the fact that we are kind of in this area here that we kind of closed out in this consolidated area. Okay, so this is what we begin to kind of develop and look at this as we walk down on a smaller time frame, right? If you're looking for a big breakout, right, you're not a scalper, then you're going to need price to close either above 79.25 or below 77.63. Because if not, we're kind of stuck in this 200-point range right in here. And you're going to be able to see that a little bit clearer as we kind of walk down and we begin looking at this 4-hour perspective here. Okay, so super important as you begin to look at this. So let's head over to the 4-hour chart, and now we begin to see that consolidation a little bit easier right in here. Okay, so again, these are going to be levels. Now, this was not only a support level in why we bought this here, okay, back on Thursday, but again, we use certain very simple strategies and confirmations in the club, and we're very big on the Fibonacci levels. And again, you can see here that this not only came to an area of previous support if you had marked up your chart on a higher time frame, but it also came within what? Within our 61 to 88 area that we look. So this was like the perfect storm to be able to take that. Price came back up. Guess what? Came back into the area. And guess what? Came back and retested. We took another buy back up. Okay. So again, just different ways to look at it. Then you're asking, well, how do you trade in a consolidated area? Well, all we did here was, let me get rid of these fibs, is we're looking for kind of the same continuity, but just to the opposite side, right? Just to the opposite side. So again, here we had come back into that area that was our sell area because again, the 100 we know is the exit. And so we were able to scalp this down from this open area right in here. Same thing happened again here. This one came actually up to hit the 88.6, which in my opinion makes your risk even easier because you know that your exit level is going to be above the 100. This comes up to the 86. You take a sell, price closes here, opens the next candle up, and we are taking this puppy all the way down as much as you want to. And again, we have a very big focus inside of our group, and it's kind of like one of the strategies that we talk about going in with the same risk. So let's say, for example, you were trading at a 2% risk. What you would want to do is go in 2 entries, right? Each with a 1% risk, which still equals 2%, right? But what you want to do is you want to secure profits. We're going to be getting back to the analysis here in just a minute, but I kind of wanted to share this because I get a lot of questions, not only from my group members, but also on YouTube saying, hey, can you explain that? So you go in, whatever your risk is, you divide it in half, but you always want to secure profits. So what we've taught our members is secure that first 20 pips, or if you're trading on futures, you're securing those first 20 ticks, and then you're letting a runner go on the second half of that second entry, but you're also going to protect that entry as well. You are not going to let a winner turn into a loser. So what our members are seeing is a lot less stress in trading. They're dividing their lot size in two with the same risk total. Again, if you were going to trade 1%, you're going to divide that in half. So you're going to go with 2 entries, same entry area, 0.5%, secure 20 pips or secure 20 ticks. You know you've got that in the bag, right? Because you can never go broke taking profits, and then you're going to leave a runner. Sometimes the runner may run 100 pips. Sometimes the runner may turn back around and hit your stop profit, meaning you've already moved that original entry in profit by maybe 5 pips, right, to cover your spread or whatever the case may be. And so at the end of the day, your worst case scenario is you left with 25 ticks or pips versus just 20 or nothing had you not protected your trade. So we talk a lot about that trading psychology piece and how to do that inside of our club. So again, you are looking at this area here. So I'm going to kind of get rid of these fib levels here now, and we're going to begin to kind of dissect where we are at. Again, we're going to kind of start looking at this 30,000 foot view now as we're looking at price action. Okay. So the first thing is that if we do, I'm going to put this up here at this spot right in here. Okay. If we break and close above, okay, we go higher, okay, because that is going to put us inside of that area that if we break this area right in here, okay, we are then expecting price to start heading back up, okay, to the next level, just like what happened over here, okay? So we're looking for this scenario, right, where price kind of goes above, comes back and retests, and then takes off. If that happens, then that would happen over here in this area. So I'm going to keep this box up here for the kind of the higher time frame. And again, you can always revert back to this video to see the example that I showed over here to the left. But guess what? We are not there yet. One of the big things that we talk about inside of our trading club is you have to sometimes understand what's going on fundamentally with the news, kind of know what's going on so you're not left out in the dark. But you have to be very careful with news, especially on crude oil news reports. They can say one way and the price action goes another way. So you really want to, and this is part of that trading psychology piece, you want to really do as best as you can to trade what you see. The only thing that doesn't lie are the candles, right, in which direction they're going. So trying to stick with the trend as much as possible, or if you're going to take a reverse trend trade, have a plan for it, a Fibonacci level, a SAR, things that we are teaching inside of our club. So again, you are going to kind of do this right here now as you kind of look at this area right in here. So let's now begin to drop down to our 1 hour chart because I want to be able to give you some areas that you can look at for implementation as you come into this week right in here. Okay. Now, again, we are talking about a little bit less than a 200-point area here. And you'll see this as we drop down to the final time analysis, which will be the 15-minute chart here in just a minute. Okay. So now that we're here, we are going to look at, number one is we are going to label the gap. And again, the gap is going to be right here. And I don't need such big lettering for the gap. So let's kind of drop this down to 20. And we're just going to put this here off to the side. Okay. And again, for those of you that are kind of brand new, what the gap means is that on Friday, price closed right here. Okay. And so when the market opens Sunday evening market, okay, 6 p.m. Eastern Standard Time, if let's just assume that a candle opens here, the difference between the close price and the open price, that is called a gap, meaning there's going to be a gap in the price, okay, to the upside in that example. If price gaps down to the bottom, same scenario. The difference between the close price and the open price is going to create a gap in the chart That's why it's called the gap. And then we trade this live in the club every Sunday night at 6 p.m. Eastern. Not only are we looking at crude oil, but we're looking at the indices, gold, silver, and everything else that gaps. And we talk about where to take the trade, when to take the trade, and all that good stuff. Because again, we don't want you to over leverage. And we usually just pick one or two charts if there's a lot of gaps. Okay, so this is considered the gap. This is where price is at now. So we'll be looking at these two scenarios tonight inside the club for live analysis. So you are more than welcome to join us there as well. If you jump in to the club, join us today, and we'll see you there this evening for the live analysis. So we are going to have to let price kind of make a pretty big decision on where it's going to go for the long term. Now, in the short term, what we want to do is we want to look for these different strategies if you are going to scalp the market. Okay. Now, you should never jump into a position unless it's a gap position. And again, we talk about that, and we give you our parameters when we take a gap and why we take a gap in the club. But again, in my opinion, it should be at least 50 points or more, maybe 40 points or more, because usually what happens with the gap is it gaps up or down and then it runs in that same direction for a while. So what are we looking for now with regards to this current chart here with regards to what we want to do? Well, there's a couple of different ways that you can play this current price here. Number one is one of the strategies that we use, and I'm going to share with you one, and the other ones are kind of the secret sauce. Okay, when you come and join us in the club. For example, here, when you see price coming down, what I like to do a lot of times is just kind of draw a trend line, kind of match up a couple of areas, right? And I only will do this kind of trading if it's coming from a support or resistance level. Nothing in the middle, because it's a lot more dangerous. Okay. Now I'm going to show you a little tweak that you can do that. But what I want to do is kind of expand this, right? And this is just a quick scalping technique on a 15-minute chart. You're looking for maybe 10 pips or 10 ticks with the break of the trend line. In this particular case, this ran 45 before it went into this kind of consolidated state. Okay. Now, once we get this kind of, trend line break here, we're just looking for price to go to the upside, because price has made a movement up. So especially on a 15-minute time frame, you should be only looking for one particular direction there. Okay, so you want to let a series of candles happen. And in my opinion, I always say we want to leave at least 30 to 40 points of a drop in this particular case, which in this case, it was 96. Now we're looking for some type of reversal. Okay, we're looking for some type of reversal. We saw it here again in this particular case here, 4 red candles. Okay, then you're just kind of putting a trend line on top of the bodies, and you're waiting for that push up, that breakout to happen in that particular area. And again, we see that here, price kind of had dropped from, it kind of met that 30-point threshold that we're talking about. Okay, these are not 30 points, so we really are discarding those. Once we see price drop more than 30, we're dropping kind of that trend line, and we're beginning to see where kind of price goes in that particular direction. Okay, so just a little something that you can do, that you can tweak to the opposite direction here. Again, happened here as well as it's moving. Just wanted to give you a little something that you could have thought about. Okay, and again, it has to be coming off a support level. So as we kind of drop now into kind of what is happening with the current price action, what you want to start doing is you want to start looking at these different levels right in here. So if you're going to be a scalper, you cannot ignore, right, these types of price happening, because as you can see, and I'm going to kind of delete this. Let me grab a quick circle here. You can see here that we've had this previous area of resistance, and price is just coming up and coming up and coming up. Price is coming up and coming up. And again, we'll talk about one of the little V-neck strategies inside of the club that we kind of talk about when we want to start taking these sell areas, breaking from these V-neck areas to be able to scalp. Because again, if we're sitting near an area of resistance, we're only looking for sells, right? We're not looking for buys, and then vice versa. If we're kind of down at the bottom, we're looking for these V-neck breaks, okay? And I'm going to kind of, at the end of this video, I'm going to show you a link to the structure video that I just did on crude oil, getting great feedback from it. Take a look at that video. That's going to go a little bit more in depth on crude oil structure to be able to give you these buys opportunities, these sells opportunities, these buys opportunities, these buys opportunities, these sells opportunities based on kind of structure and what is happening here. So, overall, this is going to be an area that we will continue to look at for scalping opportunities, both to the top side and the bottom side. But the overall bigger picture, okay, as we talked about before, is that if price is going to make a move into 81, 82, 83, then we need to see price close above there. Okay. Now, vice versa, if we get that kind of closure and movement down below 77, then we can expect price to come back on down. So I'm going to kind of put this here. If on the big time frame here we get price to close below, then we head to, I'm just going to say 76 for now. Okay. So again, if we get this price to close back in here, then we're heading towards that 76. So on a bigger time frame, okay, on a bigger time frame, that's kind of what we are looking at with regards to the big versus small time frame analysis when it comes to kind of that crude oil and what you may be looking at, okay, with regards to moving forward. Okay. Hey, so I hope you got some value on this video. Again, trading is not easy. Trading is hard, but trading is much easier in the community. So again, if you want to check out what we are doing in the community, head over to theprofessortrades.com. I hope to see you there. Again, if you got some value on this video, hit that like button. I would greatly, greatly appreciate it. Have a great weekend. Happy and great trading week for you, and enjoy the rest of your week.